So last October, I found myself at a conference of financial advisors, and I was approached by someone at the gathering, the cocktail party, a female employee of a large investment firm that I've known about for a long time. She said, "Hey, you should come to our breakout tomorrow." And I said, "Okay." I chatted with her for a couple minutes about what the breakout was going to be about. But I sat in this room, and about 4 or 5 minutes into this talk, which was an hour-long talk, I kind of put my pencil down and stopped writing. I mean, I don't think I actually had a pencil. I was probably typing on my laptop. But I just stopped typing and kind of stared at the speaker, and he's talking about something about this. You could call it a tax management strategy, but again, that's even an inefficient term to describe it. Robert and I are going to talk about it in full in this episode, but I actually had butterflies in my stomach. I got so excited about it, and yet in the back of my mind, I couldn't help but think, it can't really be this good. And so I just listened. And at the end of the breakout session, I asked a couple questions, but I forwarded all of the paperwork, the PDF downloads that they give you at a conference that a speaker provides, to my husband. And I said, "You got to tell me if this is real." Enter Robert.
It was an odd moment because I had been home with our daughter and not really focused on work at all when Hilary sent me these documents. I know the firm. I actually worked with some people who worked with one of the founders, and it was too good to be true. I had the same feeling that I had when I first heard about the Act 60 in Puerto Rico, back then the Act 2022. And back then, there were lots of people who were shilling things that were related to it, but actually weren't abiding by the letter of the acts. And I figured this was the same thing. They couldn't really have the kind of benefits that it looked at first that it did. But it turned out that what they were doing was very much like what I had been doing for 20 years, but 180 degrees. And as soon as I changed my perspective and I looked at what was possible if instead of focusing on returns, you're focused on taxes, and that doesn't mean you're ignoring returns, how powerful this could be. And I got really excited about it because it's something that is predictable, it's quantifiable. And I don't know if your listeners know how rare that is in the world of investments. Yes, we know the market tends to go up, but none of us have any idea whether it's going to go up tomorrow or next week or next month. This is something that we could actually look forward and quantify the value of it in a very reliable, if not completely precise sense. So I got very excited, and I came back to Hilary and said, "You should absolutely be doing this."
Yeah, so it took me a couple days to get home from that conference. It was in Florida. And by the time I walked in the door, he said to me, "You should stop everything else that you're doing and do this." So that was October. As I record this, it's March 12th, 2025. So it's about 6 months later because, good things take time. Wait, is that 5 months? It's 5 months. And at this point, we've created a suite of services to wrap around this offering that we're going to talk about today. We're calling that suite of services Ultra Tax Efficient Wealth Management. And like I said, we brought Robert out of retirement, and we're ready to offer this to suitable investors. And we'll define that as well. But if you know someone who has capital gains in their life, listen to this episode and forward it to them. So let's get into it.